Welcome to Monday's Targets in Focus. The euro ended the week close to two-year highs against the dollar on Friday, as the dollar remained under pressure on the view that the Federal Reserve is likely to maintain the current pace of its asset purchase programme well into next year. Kevin Yen from FXDD in New York joins me now on the line. Kevin, what's your projection for 1, 6 and 12 months for the euro-dollar pair?
Euro recently broke yearly highs around the 137 figure. Now we're trading towards a key pivot level around that 139 handle. So we're at the 50% Fibonacci retracement level. If you look at the range from the highs of 2008, when euro was above 160, and then the lows of 2010, when euro traded down below 119. Fundamentally speaking, we're in another chapter of a dollar sell-off right now. There's been renewed concerns out of China and Japan regarding the sustainability of the dollar as the world's reserve currency. And with all the things that's happening in Washington, you can clearly see that the market shifted towards a negative sentiment, selling the dollar and then lifting the value of the other major currencies. You saw this euro take off to the upside. We broke major resistance points, taking us to where we are now. And in the short term, I think that we're going to see a continuation of this trend, but we're looking for a capitulation point around the 139 to 140 range, as I don't see this as something getting blown out of proportion. And keep in mind that November into December tends to be a risk-off period, so that's a driver of dollar strength. So in the mid to long term, I think that we'll see a move to the downside to trade back into the 130s, but in the long term, to test prior lows back into the 120s.
The dollar was higher against the yen on Monday, but gains were held in check amid expectations that the Federal Reserve will delay plans to start tapering stimulus until well into next year. With this in mind, Kevin, what are your forecasts for the dollar-yen pair for the next 12 months?
If we look at dollar-yen on a daily time frame, the pair is still trading within the channel that started back in the highs of 103.50 back in May, and the lows in June when the pair got squeezed down below 94. So we're testing the support line of this channel now, which is at 97. Given the volatility, which has dropped substantially over the past few months, I think that we're going to look for a breakout soon as we come to the end of this channel. But in terms of the directional bias, I usually talk about dollar-yen from a point of view of supply and demand. So if you look at what Japan's doing, back in April, they printed out the world's largest stimulus package. It's $1.4 trillion worth of yen with a distribution timeline of 2 years. And meanwhile, you have the Fed expected to pull back on asset purchases come first quarter of this year. So if you kind of just look at this from a seesaw perspective, there's going to be a whole lot more yen being pumped into the system. It's going to drive the demand lower, and it's going to drive the value lower as well. Meanwhile, if the Fed does go through a tapering, you're going to see less dollar in circulation, driving up the demand, which in turn leads to a higher value. So I think in the short, mid, and long term, we're going to see dollar-yen pop to the upside. And this time around, after we get past that 103.50 on the high, I don't think we're going to turn them back around for quite some time.
And finally, with a look at emerging markets, what are your expectations for the US dollar crossed with the Singapore dollar for the next 12 months?
Long-term trend of dollar Sing shows a pretty clear downtrend since the highs back in 2002. The price action has been range-bound for the most part this year. We had a rally in the beginning of the year where we went from 122 up to the 129 range. We tested 130, failed to break it, and it was at that time that the central bank came out and cut GDP forecast by 0.5%. But at the same time, they improved inflation outlook by roughly 1%. So we saw price action trade back to the levels where we started the year off. And now we're testing the monthly support on this channel here. I think that going to year end, we're going to end around the consolidation range at 1.25 to 1.26. But as a 6 to 12 month projection, I think that we're going to see dollar Sing break further to the downside. We're going to test prior lows at that 121, and then we're going to see 115 to 117 in extension.
Kevin, thank you for joining me on the line today. And that's all for Targets in Focus today. But Natalie MacDonald will be back on Wednesday for more currency crosses. Until then, bye for now.